Alibaba. Let's go take a look at Alibaba. Now, the stock has actually broken out. Second candlestick higher. Starting to move a little bit, so I'm going to wait for the retracement here. But let's go in again. First preference is to do this option right here, $2 option to $1.99. I mean, that's pretty close to $2. I will jump in here because of the strength of this move and grab 10 contracts and then add to the position on a retracement. So now we are in on Alibaba. Let's talk about how we manage this one. When we get into these trades, guys, where we're buying on the breakout, right? I mean, either, even if it's fairly far into the second candlestick, big breakout, a lot of volume, clearly people wanting to buy into the stock. We don't want to miss out on an opportunity if the stock continues to run. Because look, here's the thing: there is a school of thought out there. You have a stock, it breaks out, right? And you're like, oh my God, I see the breakout, and the stock continues to break out, and you're like, well, crap, I got to get in. Okay, that is the breakout. It's a breakout of some kind of, possibly a level of resistance, or you have the breakout above the first 5-minute candlestick. You have a, Bollinger Band squeeze play, whatever it is, and this is a play that I like. This is an aggressive play. You are buying up here, fairly extended off the moving averages, and for that reason, you're likely to have to go through a retracement. Okay, you're likely to have to go through a retracement. And so the logic that is out there is that, well, what you want to do then is you wait for the retracement, and then you get in on the bounce, and that will get you a better price. All right, well, that is one possibility. The other possibility is that I got in my trade, even if it's just half the position here, you're waiting for a retracement, and instead what you end up with is another one of these, and then another one of these, and then you get a retracement there. Okay, and then the stock starts to go up. You get a little retracement, maybe to a Bollinger Band, and it starts to go up. So you get in here. Who got the better price? Even if I only got in with 10 contracts, who got in at a better entry point, and who has more room to run? The orange one, exactly. Okay, which is one of the reasons that I do that kind of hybrid, if you will, of getting in on half the position on the breakout and then adding to it on the retracement whenever that retracement happens. So I'm not saying that this one is wrong at all. This is also a good entry. What I am saying is that if the stock runs a good bit before it retraces, you missed out on all of this move from here to your entry price here. You missed out on that much of the move, which means that ultimately the stock has that much less to move. Okay, so here's our retracement on Alibaba. It's going to be a retracement all the way to the 5 moving average, but if it bounces here, I will add to the position. I'm actually going to get in at a little better price. All right, now if it doesn't and it breaks below the opening price this morning, breaks below that 5 moving average, I just get out. But look what's happening right there. Okay, so now I will go in and look to add to the position that I already initiated, which is this one right here. So BABA starts to bounce. I'm going to buy 10 more contracts. Okay, you waited for the retracement. You got in. You and I got in at a similar price. Okay, so now if it goes against me, I want to get out. So I'm just going to use the value menu based off of the lower combined price of $1.81. Remember, I bought those first ones for almost $2, $1.99. Now I've come in and I bought the second spate of options at a lower price, and so my risk management can be based off of that lower price. That's why I use that combined strategy of buy some on the breakout, wait for a retracement wherever that retracement occurs, and then you've got the full position. If the retracement does not occur for another, I mean, we know, guys, we know that this is the kind of stock that can move for 3 to 5 candlesticks in an upward direction. Well, if you're like, well, I ain't gonna wait until, I'm not buying in until the retracement. Well, okay, that retracement may not come for 3 more candlesticks. You're going to miss out on all of that move because you're going to say, I'm only a retreat. Okay, well, that's okay. There's nothing wrong with it. It's actually a more conservative entry and keeps you from living through the retracements, but yeah, it makes you miss out on some opportunities.